Right here is a ranging market, and while other indicators were giving false signals, this one clearly showed ranging on 4 of the 5 time frames. What's even more impressive is how this indicator doesn't just show you when markets are ranging, but also gives you precise entry signals during strong trends. In this video, I'm going to show you exactly what this indicator is, the perfect settings to use, and a complete trading strategy that works across any market you use. Let's get into it. To add this indicator to your chart, head over to TradingView and pull up any pair you want. I'm using the 5-minute time frame on GBP JPY, but this works on any market, any time frame. Then click on indicators and type in smooth Gaussian trend filter. Make sure you select the one by Algo Alpha. Unlike most indicators that just show you the trend after it has already started, the smooth Gaussian trend filter combines Gaussian filtering with linear regression to not only identify trends, but also filter out those choppy, ranging markets that kill your account. Now, when you take a closer look at this indicator, you'll see it's made up of several key components. First is the Gaussian band, also known as the trend ribbon. This changes color between green for bullish trends and red for bearish trends. But before we go any further, let's adjust the settings so we can see all the necessary components. Double-click on the indicator and activate these 2 disabled components, the mid-trend signals and the trailing bands. Also, change the table size to large and click OK. Now, we can see the full power of this indicator. Notice these up and down arrows? These arrows mark the exact moments where the trend shifts. A green arrow shows the shift from bearish to bullish, while a red arrow shows the shift from bullish to bearish. See these smaller arrows appearing within trends? They're called the mid-trend signals. They show potential entry points during pullbacks when price touches the Gaussian band and then continues in the trend direction. Now see the brightness of the trend ribbon. The brightness isn't random. It's based on volume intensity. Brighter colors mean stronger volume, making these areas high probability trade zones. On the right side, you'll see the multi-time frame signals table. This is where the magic happens for filtering out ranging markets. It shows you the trend across 5 different time frames, labeling each as bullish, bearish, or ranging. And when multiple time frames show ranging, that's your warning to stay out of the market completely. However, most traders will still mess this up. They rely on emotions, guesswork, and outdated strategies, losing money instead of making it. But the ones who win, they use the right tools and strategies. Tools that find the most profitable trades early and avoid false signals. The best part, this tool is now 100% free. Claim access today with the first link in the description. Now, let's optimize the settings for maximum effectiveness. Double-click on the indicator to open the settings panel. You'll see that the default Gaussian length is 15. I found that increasing it to 150 gives you much cleaner signals with fewer false entries. Next, you want to adjust the smoothing length from 22 to 30. This further refines the trend ribbon, making it more resistant to market noise. Leave the poles setting at default, but you might want to adjust the flattening multiplier based on market volatility. Higher for choppy markets, lower for clean trends. For time frames, I recommend setting these to 5 minutes, 15 minutes, 30 minutes, 1 hour, and 4 hours. This combination gives you the perfect balance of short and long-term perspectives. You can disable volume intensity, highlighting if you prefer a cleaner look, but keep the mid-trend signals enabled because we'll use these for our entry strategy in a minute. Once you've adjusted these settings, click OK. Now, let's put all these together into a complete trading strategy. For long entries, you need 3 specific conditions to align. First, confirm that the trend is bullish. You want to see the Gaussian band colored green, indicating an uptrend. Check the multi-time frame table to ensure at least 4 of the 5 time frames show bullish, not ranging or bearish. Second, wait for a pullback to the Gaussian band. The price needs to come back and touch the band without closing below it. It can touch with a wick, open inside the band, or even close inside, but a close below the band invalidates the setup. The most important part of this pullback is the candle pattern. You want to see one red candle followed immediately by an engulfing green candle. This engulfing pattern shows that buyers are stepping in with force after the pullback. Third, check the multi-time frame table one final time to confirm alignment. You want to see at least 4 time frames showing bullish, especially the 1 hour and 4 hour. This ensures you're not trading against the bigger trend. When all 3 conditions align, enter your long position at the close of the engulfing green candle. Set your stop loss just below the recent swing low. Use a 1-to-2 risk-reward ratio for take profit. Let the trade run. And it would have been profitable. For short trades, you'll follow the same process but in reverse. First, confirm that the trend is bearish. The Gaussian band should be red, and at least 4 of the 5 time frames should show bearish in the multi-time frame table. Second, wait for a pullback to the Gaussian band. The price needs to come back up and touch the band without closing above it. For the candle pattern, you're looking for a green candle followed by an engulfing red candle. This shows sellers taking control after the pullback. Third, check the multi-time frame table to confirm alignment. When these conditions conditions align, enter your short position at the close of the engulfing red candle. Set your stop loss just above the recent swing high. Now, different markets have unique personalities, so let's adjust our settings for each one. For Forex pairs, set the Gaussian length to 150 and the smoothing length to 30 for major pairs. Reduce to 125 for exotic pairs, which tend to be more volatile. Focus on the 1 hour and 4 hour time frames for the cleanest trends. For gold, increase Gaussian length to 200 for smoother trend identification. Boost the flattening multiplier to 2 to filter out gold's notorious fakeouts, and pay special attention to Asian session ranges, which often lead to breakouts. For crypto, reduce the Gaussian length to 80 to catch those explosive moves early. Use a lower smoothing value of 15 to reduce lag. Also give more weight to higher time frames to avoid getting chopped up in volatility. For stock, set Gaussian length to 180 for systematic trend following focus, primarily on daily time frame signals. Combine with volume analysis for gap plays and earnings reactions. These market-specific settings give you a complete system for any trading environment. If you found this helpful, smash that like button and subscribe for more trading tips that actually work. Drop a comment if you want me to break down more oscillators like this. Thank you, and see you in the next one.